Bitcoin is, of course, the fastest horse in the race, and here's why. Every commodity has supply responses, different sensitivity, right? Gold prices go up, they mine more gold. Copper spikes, they open new mines. But Bitcoin has a fixed supply, right? There's 21 million coins, there will never be any more, ever. No matter how much money they print, no matter how high the prices go, you can't make more Bitcoin. And with the U.S. strategic Bitcoin reserve coming, corporate treasuries are buying, nation states are accumulating, and we're watching the fastest horse meet the biggest wall of money in history. So all the doomers that they've been calling for the market crash coming for, the past 12 years, they're all going to have to wait a little bit longer.
Bitcoin's record-breaking surge isn't just market momentum. It's a reflection of growing trust in digital scarcity amid relentless money printing. Bitcoin, BTC, has surged to a new all-time high of $124,871, pushing its market capitalization close to $2.5 trillion and reaffirming its dominance as the world's leading digital asset. Investor and educator Mark Moss highlights that this rise isn't just about speculation, it's about structural monetary forces reshaping global finance. While policymakers once blamed tariffs for inflation, Moss argues the real driver is relentless money printing by central banks like the Federal Reserve, the ECB, and the BOJ. With trillions being injected into the economy and governments running record deficits, he believes that this excess liquidity will continue flowing into hard assets such as commodities and Bitcoin. Unlike gold or copper, Bitcoin's supply is permanently capped at 21 million coins, making it immune to inflationary expansion. Moss calls Bitcoin the fastest horse in the race, as corporations, nation-states, and even governments begin accumulating it as a hedge against currency debasement. This digital scarcity, Bitcoin's unchangeable DNA, positions it as a modern store of value, similar to gold but far more portable and transparent. As global debt mounts and fiat currencies weaken, Moss contends that understanding this shift isn't just about ideology, it's about survival in the new monetary era. The biggest crypto moves are on the horizon. Subscribe now. Turn on notifications to be the first to catch the next breakout live.
You and I were going to pay the tariff, then why are the other countries freaking out so much, right? And of course, we have the proof now. About a year into these tariffs, we're now seeing $400 billion a year coming in, right? That's real money coming into the U.S. Treasury. But inflation, it's basically nothing, right? And like I said, Powell just admitted it. Now compare that to what they were telling you 6 months ago or 9 months ago. Remember, every economist on CNBC said that tariffs equal inflation. It's a tax on consumers. Prices are going to skyrocket. We're going to have 1970s stagflation all over again. But of course, it's not been true. Or rather, was it just misdirection? Like magic, right? Like, look over here while they cause inflation over here. Because there is real inflation being caused. But of course, they don't want you to see it. They don't want you to understand it, right? The U.S. government is running $2 trillion deficits every year, which means the borrowing, or as we call it, the money printing, is continuing to make new all-time highs. Right? We have the U.S. debt clock rushing to add about $1 trillion every 90 days or less. But it can't be because of the money printing, right? It's got to be the 0.3% from the tariffs, right? And rather than looking at the government's CPI, Consumer Price Index, or as I call it, CPI, I like to look at an index called true inflation. It's the real metric that strips out all the BS, right? It shows inflation dropped from over 3% to 2.05% just this year, while tariffs were in place. The thing they said would cause inflation actually happened during inflation. Now think about this. Reagan put massive tariffs in place in the 1980s. Did we get hyperinflation? No. We got the strongest economic boom in modern history with the same playbook, but just a different decade. So the real reason the Fed's cutting rates right now with stocks at an all-time high, with unemployment at record lows, is because they know if they don't get the rates down right now, the interest on the debt would be unpayable. And that would send the government into a debt doom loop. So the real inflation, it's not tariffs. It's coming from the Fed. It's coming from the ECB. It's coming from the BOJ. All of them are racing to debase their currencies, and they're using tariffs as the scapegoat. Okay, so now that we know that it's not coming from tariffs, it's coming from the Fed's printing, We know that they have to keep printing or they're going to face a debt doom loop. And we know they're going to keep printing. Then the question is, where does all this money go, right? Because it has to go somewhere. Now, I'm going to tell you exactly where I think it's going to go. Now, first, you have to understand the setup, right? We've got 22.2 trillion in M2. Right now, again, the Fed's cutting rates again right now with markets at all-time highs. Right, they just admitted tariffs aren't inflationary, which gives them cover to print even more. And what almost nobody's connecting is that all this printed money is about to collide with the biggest infrastructure build-out in history. I'm talking about AI data centers. Right, every big tech company, Microsoft, Google, Amazon, Meta, they're all racing to build. We're talking hundreds of billions in capex. And what do AI data centers need? Well, a lot of things, including massive amounts of copper for wiring. They need lithium for battery backup systems. They need silver for electronics. So think about this. One AI data center uses as much copper as 40,000 homes. Microsoft's restarting 3 Mile Island just for power. Google's building their own nuclear reactors. Now, this isn't some future prediction. This is all happening right now. So you've got unlimited money printing, meeting limited commodity supply. So what happens to prices? Well, elementary 101, supply and demand, right? Prices explode. We can already see copper's already breaking out. Lithium's making another breakout, right? We see gold, like I said, it's up 40%, making new all-time highs. Bitcoin's, of course, the fastest horse in the race. And here's why. Every commodity has supply responses, different sensitivity, right? Gold prices go up, they mine more gold. Copper spikes, they open new mines. But Bitcoin has a fixed supply, right? There's 21 million coins. There will never be any more, ever. No matter how much money they print, no matter how high the prices go, you can't make more Bitcoin. And with U.S. strategic Bitcoin reserve coming, corporate treasuries are buying, nation states are accumulating, and we're watching the fastest horse meet the biggest wall of money in history. So all the doomers that they've been calling for the market crash coming for, the past 12 years, they're all going to have to wait a little bit longer. All right? Look, Powell told us, right? He told us the truth. Tariffs aren't causing inflation. They never will. Right? The Fed's been lying or misrepresenting to us at best, if you want to call it that, right? They're going to print trillions of dollars and give it to the banker friends. But the thing is, you can either get angry about it or you can get rich from it, right? Because once you understand the game, then you can play it too. The Fed's going to keep printing. They have to. The debt's unpayable. It won't ever be paid back. The system's going to require it. And all that printed money, it's going to go straight into hard assets, commodities, Bitcoin, anything AI infrastructure touches, right? I think this is the trade of the decade.
As central banks flood the world with trillions in freshly printed money, investors are turning to Bitcoin, not just as a trade, but as a lifeline in a system running out of trust. Mark Moss reveals that while the mainstream narrative blames tariffs for inflation, the real culprit is unchecked money printing by the Federal Reserve. He notes that even Fed Chair Jerome Powell admitted companies, not consumers, are absorbing most of the tariff costs. Moss highlights that the M2 money supply has surged to an all-time high of $22.2 trillion, driving true inflation across the economy. Gold's 40% rise this year, the strongest since 1979, didn't come from trade policy but from relentless liquidity injections. What's more, Moss warns, the Fed is cutting rates despite record-high markets and low unemployment, effectively throwing gas on the fire while telling you there's no fire. This backdrop is fueling Bitcoin's momentum as investors seek protection from fiat debasement. Bitcoin recently crossed $125,000, marking its highest level ever, and history suggests more upside. October has delivered gains in 10 of the last 13 years. Betting markets now place a 60% probability of Bitcoin breaking $130,000 by Halloween. Beyond price action, Moss underscores a deeper narrative shift. Bitcoin is no longer just a speculative asset. It's becoming the world's preferred hedge against systemic money printing and a cornerstone of the modern financial revolution. Let's get back to the interview.
The Fed chairman is admitting right there that companies are absorbing the costs, right? Not you. But look, while they were blaming tariffs for inflation, that never came. Over here, the M2 money supply, it just hit an all-time high. It hit $22.2 trillion. That's the real inflation. Because of that, gold's up 40% this year, the best performance since 1979. Not because of tariffs, Because they're printing money like crazy. And here's the crazy part. With unemployment historically low, with stock markets at all-time highs, the Fed's actually cutting rates again right now. Think about that. They're throwing gas on the fire while telling you that there's no fire. Let's break down exactly how this tariff mechanism actually works. Because once you see it, you'll understand why Powell had to admit the truth. All right, now it's one thing to see the lies and understand how the Fed is using tariffs as a smokescreen for the real inflation being caused by their money printer. But it's another thing entirely to know exactly how to protect yourself and how to profit from this. Now, while they're busy debasing the dollar and stealing your purchasing power, the wealthy are playing a completely different game. Now, they're not just buying assets. They have a system to multiply their wealth faster than the government can actually print the money. And they use strategies to make $1 do the work of 3 or 5 legally. They slash their tax bills to almost zero. And they turn that saved tax money into cash flowing assets. But the strategies that they're using, they're not that hard once you understand them. And so next week, what I want to do is I'm going to go live. I'm going to break all this down and you can come hang out. I'm going to answer all your questions live to make sure that you get it and you can apply it to your exact situation. So check out the link in the description down below. There's a QR code here on the screen and just come hang out, right? Learn the 3 secrets that the 1% use to build their wealth 300 or 500% faster. Now, if you want the blueprint, I'll put a link down below. Just click on the link in the description. It's completely free. Click on the link, reserve your spot. And now let me show you the real inflation story that they don't want you to see. Okay, so what Powell was saying in that video is that tariffs only added about 0.3 to 0.4 to inflation. That's it. Out of 2.9 core PCE inflation, maybe 0.4 is from tariffs. But the rest, where is that from? That's from the money printer going burr. Let me break down how this actually works because the mainstream media, they're not going to tell you this. All right, there's 3 parties in every tariff transaction, right? You've got the exporter, that's China, whoever's making the stuff. You've got the importer, that's, Walmart, I guess, and they're bringing it in. And then you've got, you and I, the consumer, right? That's us. Now, the media wants us to believe that you and I, us the consumers, are going to pay all the tariffs. It's like a tax, right? But that's the lie. Let me show you what I explained back in my video called The Tariff Lie. Let's go ahead and play that clip.
Is that tariffs equal isolation. Tariffs are anti-trade. Tariffs are anti-globalism. That means that you don't want to participate in the world and you want to be an island. Well, maybe, maybe not. Again, maybe that's oversimplified. Tools, trade, or tariffs, protectionism, are greater than building up walls. So it's not about walls. It's about tools and strategically using tools. So countries want to use these tools because it's how you adapt. It's how you can grow. And so these tools, tariffs, walls, are a tool that can be used to buy time. This is what America did. This is exactly how America grew. When America broke off from Europe, Europe was much more advanced. Europe could make everything faster and cheaper, right? So the U.S. had to put tariffs in place to protect the economy so it could grow to then outpacing the European economy, right? That's what happened. But it needed to buy itself time, and so those protections did that. Now, also, you want to use them strategically. Again, theory is just dumb and it's vague. Specifically, we want to use strategic uses. So, for example, it doesn't make any sense to be the best fruit producer when fruit grows in a different part of the world. Like, let them grow the fruit. We'll bring the fruit over here. We don't really grow good fruit here, right? But we have these minerals in the ground they don't have, so let's get these minerals over there. So definitely it's strategic as well. Remember, these are very dynamic, very complex issues.
See, I explained it right there. Walmart pushes it back down to China. China pushes it back down their supply chain.
Bitcoin's fixed supply positions it as a unique asset in an era defined by relentless money printing and currency debasement. Traditional stores of value are increasingly challenged by economic uncertainty, prompting investors, corporations, and even governments to seek refuge in digital assets that cannot be inflated away. While its price can experience volatility, Bitcoin's scarcity and decentralized nature offer protection against the erosion of purchasing power that plagues fiat currencies. As global liquidity continues to expand and debt levels reach unprecedented heights, the adoption of Bitcoin reflects a shift toward sound, resilient money. It is emerging not only as an investment but as a fundamental pillar in the evolving financial system. How can Bitcoin's fixed supply and decentralized nature protect investors from the inflationary pressures of traditional fiat currencies? Bitcoin is moving quickly. Let us know what you think in the comments. Share this update with your friends and network. Hit subscribe to stay on top of the next major market move.